Good morning. This is Dylan Jovine behind the markets. Happy Tuesday. Today is Tuesday, September 30th. And I read a great little article in the Wall Street Journal from Andy Kessler, very smart person, very smart, astute observer of world affairs and everything that's happening. And we talked about, the title of the article is Time to Stress Test Everything. Data centers, China, the dollar, America needs a new durability assessment. And basically, he lists what he thinks are the biggest risks to us right now. 1, 2, 3, 4, 5, 6, 7. So I'm going to go over them. And his first one that he lists is China and Taiwan. Will China invade or blockade the island where most NVIDIA artificial intelligence chips are made in 2026, next year, or in 2028? In other words, the question is not whether or not China is going to try to take Taiwan. The question is when. Now, what would happen if China actually did that? Of course, this would be disruptive for West. It's $2 trillion of trade that goes through the South China Sea. So just look around your house, couches, TVs, phones, computers. A large portion of it runs through the South China Sea. So what would we do? We need to be running through that scenario. So that's his number one risk. Number two risk, data center overbuild. When he talks about basically these massive amounts of data centers that are being built right now. And this is something I was going to touch on in another one of these diary videos. There are a lot of circular deals going on. You have Microsoft investing in OpenAI, which receives credit. You have NVIDIA investing famously $100 billion last week in OpenAI. And think about what that investment is. NVIDIA is basically buying a customer, basically saying, I'll invest $100 billion in OpenAI as long as you guys buy NVIDIA chips. So a lot of circular deals going on. It's like musical money. And what does it look like if that starts to implode? There were a lot of circular deals back, eyeballs for equity, back in the dot-com crash, remember, very famously. Also, another risk, just a stock market sell-off. This is the third risk. What happens if the market falls 10, 20%? That's easy, actually. I don't really see that as a big problem. If the market falls 10 or 20%, I'm going to be tap dancing. Remember, in April, when the market fell, 15, 18%? I call it the Peter Navarro gift. He was on TV every day arguing for Liberation Day, and the market just kept crashing. And thank you, Peter Navarro, for setting the market so low, being such an absolutist in your trade policy, because that sent the market into the worst April since the Great Depression, which is great for me and my friends and readers and subscribers of Behind the Markets, because we got to buy a lot of things really cheap. So thank you. And the other thing is crypto sell-off. There was a movie, and this is the reason that really piqued my interest in this article. There is a 1929 film called Coconuts, the Marx Brothers, and he references it in this article. And I remember this very famously. There's a little old lady going to buy a home, and the Marx Brothers, they see the Florida boom in real estate, and they want to get rich quick. So they move down to Florida, they start getting homes built and selling them, and famously one scene where they're trying to sell homes to people, this little old lady says, "Ooh, can I have a home with stucco?" And Groucho says, "Oh, you want stucco? You're going to get stucco. You're going to get stuck." Basically, it's a greater fool theory. And basically, crypto really is in the greater fool theory right now. There's a Bitcoin holding company, MicroStrategy, we've talked about before, many guys talked about. It's really valued at more than 3 times its Bitcoin holdings, which is crazy. So what happens if Bitcoin sells off and that stock just gets pummeled and that stock is forced to sell a bunch of things? So that's the other risk. 4, dollar drop. The dollar's down 10% this year. No one seems to care about the stock market because the market's been going higher, but the U.S. equities are priced in dollars, so it makes sense. But the dollar has gotten hammered, really. If it drops much more, you can see interest rates rise to support the currency, which would be 10-year treasury yields above 5% would not be good. I hope somebody in Scott Bessen's Treasury Department is actually stress testing this scenario. Private credit implosion, another risk. New to this economic cycle is the growth of private credit, now about $2 trillion in size. We didn't have that. It was mostly through banks before, but now we have these shadow lenders that are lending all types of money to the economy. Who's really watching that to see how that works? So those were the economic risks that he talked about. I am glad that he started with China taking Taiwan, because the news has really been leaking recently that Xi Jinping is really trying to get from President Trump. It leaked this weekend, basically his okay to take Taiwan, which is very interesting to see if the president actually does that. That would be wild, actually. We will see. We will see. That's his ask for a comprehensive trade deal with America. We always knew that was going to be the ask. Everything else is minuscule. So we're going to see if the president trades away Taiwan. And if not, China might be saying to the president behind closed doors, look, if you don't sign off on Taiwan's kind of our property, then you're going to put us in a position where we're going to be forced to take it. And boys and girls, let me tell you something. That happens, all hell breaks loose. Anyway, that's all I have. Have a wonderful day. I will see you tomorrow.